Hey everybody, it's Mark Yagi. Welcome back to another weekly stock market update. Today is August 23rd, 2024. And we have come off a week. Well, last week wasn't bad, but the week before was like the world was ending and the sky was falling and everything was going to nuts. And just like the market does, it corrects itself and now we're back into a green market. So things are pretty good right now. We got all-time highs in the New York Stock Exchange. Let me show you what I'm talking about. And hopefully you'll see what I mean here. So let's take a look at here. All right. So you can see 4 green lights on the market. We've been essentially green for 6 days. The New York Stock Exchange here is at 19,000. That's an all-time high. And you can see the NASDAQ is not performing quite as well. It's just above its 50-day moving average, that red line there. So we've got to be careful. But I think this one is a lagging indicator. We've had some weakness in the NASDAQ, as you can probably see right here with that chart. And now it's basically made a retracement, more than 50%, probably a 61% Fibonacci retracement up to 18,000. And it might hover in here before it kind of heads to that 18,671. But this was one of the weakest indexes, kind of pulled us lower over the last several weeks. Same thing with the S&P 500, although it's a little bit broader of an index and it's a little closer to its all-time highs. Had a beautiful bounce above the 50-day moving average about 8 trading days ago. So nothing to worry about there. The Dow Jones is right back up, only a couple 100 points from its all-time high. So the Dow Jones is making cause to go higher. So I think when you get the Dow and then this one, the New York Stock Exchange together, everything else is going to kind of follow, because these indicators and these indexes kind of go with confluence. They kind of all move together over time. Like right now you're seeing a little bit of divergence, but there'll be convergence at some point, whether it's the lousy ones pulling the great ones down, which I don't see happening, or the opposite being true. The VIX is off this crazy spike that it had a couple of weeks ago, back down to about the 16, which is the mean of it. It's a little higher than we were used to here over the last year or so, but now it's at 16, right at its mean. That just basically tells you a lot of people believe that they're selling, a lot of people believe that they should be buying. So that's not an unhealthy spot. But I wanted to show you the housing index, because everybody's talking about how Florida housing is crashing and Texas housing is crashing and we're going to get this big crash and blah, blah, blah. And these are just, I want you to be careful when you listen to news, because when you look at the technicals, when you look at the charts, you can see here's the housing index chart. It's at an all-time high, right? You're within pennies. And so that means that the housing companies are all doing well. That means investors are believing in the housing companies. So whether the news is right or wrong and they're just reporting, like, it's a bunch of crap. Like, if you're believing the news still, you may want to get new news sources or new sources of information, because the news is generally wrong. And everybody's saying that the market's going to crash, especially if the Fed lowers rates, which they just announced today that they're going to be moving toward lowering rates. Like, if you lower rates, that means more people can afford homes. If more people can afford homes, they're going to build more. They're going to buy more. There's going to be a velocity of homes. So I don't buy this news thing that the lowering of the rates is going to cause a recession, blah, blah, blah. I kind of think we've been in a rolling recession for a long time anyway, but the housing market is certainly not indicating that we're in a recession, contrary to what all the news sources that I've been seeing say. All right, Apple. Here's my take on Apple. And it's a little bit technical, but it's a little bit more fundamental. So notice there's a relative strength of 86 on Apple, right? And notice how it kind of made a correction from 237 back down to 196 very, very briefly, and popped right back above its 50-day moving average. All healthy stuff, except for, of course, the big drop, but it's popped back above the big drop in a green market. So this is all good for Apple. Why? Well, Apple wants to make a run at that 237 high. And if it does that, and it does it on volume, I think the stock could go to 250 or so, because it's coming into that September release of their new iPhone product, the 16. And the 16 has AI built into it. It's got ChatGPT built in. It's got an improved Siri. It's got a bunch of other bells and whistles. And a lot of people believe, a lot of analysts believe, that this is going to be a big upgrade cycle for Apple. I have the iPhone 15, so I'll probably wait another year unless it breaks or something. But, you know, when you get a new phone release, people trade in their old one and get the new one. And that's probably going to happen with this one. So we'll keep an eye on that fundamental analysis there. Nvidia, I just put out a video on it this week on YouTube and Rumble and some other places. And Nvidia is in a third stage base, so it doesn't have the strength that you want those early stage bases, 1s and 2s. The third stage means there's a lot of people starting to sell there, so it's really hard to make it go up. Nonetheless, Nvidia is AI, Nvidia is chips, Nvidia is graphics, Nvidia is cutting edge. You got a great CEO, they got great numbers, and everybody thinks they're going to blow it away. This stock could move $30 up or $30 down in the next couple of weeks. It's got numbers next week. So you got to be really careful going into numbers because we just don't know which way the stock is going to go. Right now, the options market prices this at about a 10, 11% implied move either way. It could go up $13. It could go down $13. I know Nvidia, it could go up and down a lot more. You can see it went from 140 all the way down to 90 just in the last month, right? 2 months, let's say. I mean, that's a huge correction. It's a 40% correction. So don't be thinking that stocks just grow to the sky. Sometimes trees don't grow to the sky. All right, Tesla is kind of hanging above its 50-day moving average. It's been a yo-yo this week. It went from 210 to 228 to 210 back to 217 right now. So Tesla is just try to bide its time before it does that robotaxi announcement here in October. Amazon, it's not looking healthy to me. It's trading under its 50-day moving average for a while. Filled this little gap that's here right there, which is great. But to me, it's until it gets back up above its 50-day, I just don't like it. I know it's Amazon and blah, blah, blah. If you're long-term, fine. But, you want to buy these things on strength, not on weakness. And right now it's weak. You're seeing a relative strength of 67. Last one I'll do is Super Microcomputer. Super Microcomputer bounced down to the 500s and up off of it to the 600s, and it's just hovering right in there. So actually healthy action this week, but again, this is in a short-term downtrend, long-term uptrend. It depends. Is it on sale or is it going lower? I don't see a lot of reasons to buy it or sell it either way. That's just the way I look at SMCI. All right, so that's it. You know what? I'm gonna do one more for you because I find this one to be interesting. This is Netflix. And I've been looking at Netflix for a while. I've been talking to people about it right in here. Netflix, as you see, had the $700 swoon down to like $80 or whatever. Like, hopefully you didn't have it then. And then it built all the way back up. Now, it took some time to build all the way back up, but now it's at its all-time high. Now, think about the business. Who is the competitor to Netflix? Like, who's the real competitor? Amazon Prime? Okay, they've got less market share. Paramount Plus? Way less market share. Disney Plus, well, that's for kids. Nobody is in the business to beat Netflix. So they're the market leader. They're the elephant in the room. And so you can't really bet against them. This stock, to me, looks like now that it's got all of these sellers behind it and out of the way, and it's bought all of their stock all the way here, this stock looks to me like this could go higher. So keep an eye on Netflix because it's one of those companies that they don't have competitors and they're doing things right. And if they do another raise of prices, people are used to raising prices right now, so they'll pay a little bit more to get the kind of information and entertainment they get from Netflix. All right, that's enough for me. Hope you have a great weekend. We're coming into the fall. Maybe the weather's cooling down a little bit. Hopefully you'll get out and enjoy a little bit of the beautiful weather. And I think, as always, thanks for joining me. And I'll see you next week on the weekly stock market update. Thanks a lot. Bye.